Hello, folks. Listen here. Bill and Brian with Energy Rogue coming up with a little weekly update live. And at least I feel a little bit live. I think Brian's probably closer to dead as much as he's been traveling here lately.
Well, I don't know.
So,
You say I've been traveling, but
That's right, folks. Even if you're running some old equipment like this, Brian and I can help you get the most money out of your gas and the most money out of your oil. Listen, we're here to help. Just be sure and give us a shout out here at Energy Rogue. So, Bill at energyrogue.com, Brian at energyrogue.com. Hey, listen, we're here to help you be a success.
that's
yes.
pretty sharp. That's a pretty
Yeah,
good
that means I was outstanding in my field. That's what I
one. Just like a scarecrow.
Hey, listen, it was a lot of fun. I got out there and got my Jeep muddy. We went into some well, they called them roads. I'm thinking that maybe they were just basically just goat trails, but it was a lot of fun. What was fun is be able to come up with strategies to help that producer get a better net back at their well. So that's what we were out there doing. As you can see, Brian, I do not put anything as a barrier for us to go out and see what we can do. And so I left from there to go to another point where we were helping with another producer do the same thing out there in the field. And it was, I'm not saying, Brian, that we were out in the boonies, but the zip code was 𝐒𝐫𝐤𝐢𝐳. So,
When you used to tell me that you chased tornadoes, deep down I always just thought it was a metaphor.
yeah, understand that. I had one come visit me last week here at the house. So,
Right. Well,
You mean when I'm not running the country?
yeah, exactly.
well, listen, what we're going to dive in today, that was a good entry. And just a little bit about who we are. We're not going to make this very much a commercial. We're just going to introduce ourselves, Bill and Brian with Energy Rogue. We have been in it around the energy industry from a production side, from a consumption side, from a midstream side, from a trading side. And what we found is that there is a black box of what happens in energy markets. So what we did is we developed a product that helps you understand the how, what, and why about the business. And we put this into very affordable packages, which is if you just want the basics, $89 a month. If you want access to our trade room, our Discord channel where people are actively talking and we're having dialogues and questions about trading strategies, hedging strategies. And these are producers, these are consumers, these are end users, these are hedge funds, these are traders in 5 different continents. So we have the globe really represented in here, and we have all kinds of perspectives. And that is really the value of Rogue Premium. But if you want access to the basics, you're going to get a weekly PDF report, which is going to give you access to, let me actually put this over here. There we go.
Well, that one's looking ugly, isn't it?
Well, on group, there we go. I just sent this out this morning, and this gives you your handy dandy narrative around the market, plus a convenient bull bear green or red on whether or not we are looking bull or bear. And all of that you get for only $89 a month. And again, if you want kind of that extra insight, it's $179 a month. These we should be charging a lot more, but we want to make this affordable for everybody. So that's what we do. That's who we are. Did I miss anything on that intro, Bill?
Just the fact that between Brian and I, we started counting our years of experience in decades now, not years, because we've been in the business for so long. I tell people I got my first job throwing dinosaurs in tar pits. I'm not saying I've been in it a long time,
Yep.
But my first phone number only had 3 digits. Let's put it that way.
Yep.
So,
And essentially you can consume everything on the web and probably spend 30 hours a week and still not get
easily.
as much insight as one of these PDF letters and just a few of these charts because all these charts are interactive and downloadable. As a matter of fact, we are going to talk a little bit about commitment of traders on natural gas because there's been a lot of questions on natural gas today, and two things that I want to discuss.
Wow, look at that.
Yeah. Well, but this week we started off strong, and part of the reason why is it might have been some short covering. We're not going to find out till the commitment of traders reports from the CFTC on Friday. But if you are guessing why things are happening in the market, case in point, a lot of people were confused about natural gas. Now, if you're tired of guessing, it has to do with multiple factors. There are fundamental factors, there are technical factors, and all of these are in play at any single time. And on that note, this is why we developed our system, which helped us understand the supply side, the weather side, so that you could actually look into, are we rising or dropping on production? For example, and on October 30th, we were at 103.2 BCF a day. We dropped to 101.8. So if you are guessing or you're confused why we went up or down, it has to do with a lack of basics on understanding some of the fundamental side or some of the technical side. And those are really the two key elements, don't you think, Bill?
Oh yeah, and the other thing is it's never one thing. And this is what we try to help people understand is that there's not one thing driving the market up or down. It is the multitude of things and how they're interacting with one another. And that's where Brian and I's expertise come in. We don't just look for one thing. You can't if it's just one thing, it's way too simple. And so, but there's multiple things going on in both the demand and supply side that
Yep.
have, and then you throw in geopolitics, and it gets even crazier. So what we do is we try to look at everything we possibly can and say, okay, why is this doing this? Why did it do that? How did it have the impact on the price? And how long is it going to have an impact on the price?
Right.
So sometimes it's not just where, it's when and how long.
And if you stick around to the end, you're actually going to have kind of a roadmap on what the basics of your understanding should be. If you are trading energy commodities, if your business depends on those values, whether it's from the production side or the consumption side, if your business functions off that, these are the basics. These are the things that you have to look at. So if we look at crude oil, natural gas, you have unpredictable markets and uncertain future. For example, many people were really confused when we went on natural gas. Let me bring this over. And this is what happened on Monday. We went from 275 all the way up almost, and then the next day we got to $3. A lot of people are left asking why. Well, there's a couple of different factors. There's some technical and some fundamental. Now, a lot of people are also asking why crude oil dropped and actually got close to the mid 60s on that side. Well, there's a lot of factors there, and fortunately, we have a incredibly smart group of people in our Discord group where we are talking about this every single day. This is just today. So this is just we're talking about these dynamics every single day so that you're equipped. And these are the factors. But when you
I said, Brian,
have
I think we need to throw in there too that if you're in a fickle market, when you see those numbers like that, there's one more piece you have to understand. You have to understand what your basis relationship is to that NYMEX number. And
right,
if you're selling your gas on gas daily average, this is important for you to understand what your price is getting on an average on a daily basis. You can understand where your price is going and where it should be going. And so one of the things we also offer is that if you feel like that maybe you're not your price is off a little bit or that we can also audit your statements and help
yep.
you understand how you're being paid and also if you're being paid correctly. It's not beyond people to make mistakes on that. and and it can be very complex to some people who are putting out the bills as much as the ones reading the bills. And so we can help you with that. But it's very important to understand that when crude oil goes up and down like that, you need to understand where the postings are, who's buying your crude oil. And if you don't even know where what refinery your crude oil is going, there's some things that we need to be talking about. That's for sure.
Yep, definitely. And hey, Mirren, how are you? Good to see you. An all-world energy crisis. Here's the thing. It's not a battle between fossil fuels and renewables. It is a battle for energy consumption and a continued growth. There is a strong correlation between energy consumption and GDP, or economic wealth of a country. And so that is actually very, very important. And the all world energy crisis is very much in viewpoint here. So a visual introduction, unpredictable markets, unpredictable future. For example, we've had a 10% move in 2 days on natural gas, and we've had 20% moves on crude oil and 20% moves on natural gas. And if you were trading, buying, selling, hedging, all of that matters. If you're selling molecules, that means one thing. If you're buying molecules, that means another. So if you are a power utility or producer, these market dynamics do change your outcome. So this actually happened this week. And why did we have the sudden move up? So this has been the center of what we've been discussing all week long. Why did we move up? Well, we moved up for a couple of reasons. And one reason is if you look at our rigs and you look at our trends, you'll notice a couple things. I delivered a short this morning that actually talked about this. Many people have a hard time with this, but we have been in base decline since December of last year. So let me say that again. We have not been adding production since December of last year. Now, if you're measuring today versus yesterday, you may see growth, or this week versus last month, you may see growth. Okay. But today, we have, depending on the data source, I've seen one data source at 100, another one at 102. So there's different data sources. I would call our production right at 101 right now. The delta
Look,
between
you
that,
there splitting the difference just like that.
yep, splitting the difference. So 101. But in December of 2023, do you know what we produced, Bill?
No, 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 no.
No,
105.
no. 105. I wonder how you knew that.
You know, I subscribe to this service that tells me a lot of things about the energy market, sometimes more than I can even understand myself. And
Let's
so
check
I
your
actually
math. We're going to check your math.
check
So
my math.
December of last year. Oh, look at that. 105.8 BCF a day. Bill gets a prize.
There
So
we go.
when we look at 105.8 BCF a day and 101 today, that means we have declined. So in relative terms, we have dropped. In the fourth quarter, we're looking at a different rebound. But what we take a look at, and part of the power that you really have here, is you're able to look at different basins for the United States on production. For example, this is the lower 48. Let's look at the Permian. The Permian is continuing to add, because you can see the zero line over here. The Haynesville, you add that in, we're in decline if you put Permian and Haynesville together as a macro. So then what we're looking at is when we add in Eagle Ford, Bakken, and Appalachia, we are in base decline. Now, what I'd look at is we are entering the fourth quarter. Fourth quarter, we're going to start to see different trends. For example, Bill, what does this trend look like?
That looks like I'm trying to see what chart that is. Oh, that means that we are actually beginning to get enough production to come up toward flat, but we're still in decline.
That's right. This is the Appalachia region that has the Marcellus and Utica and gearing up for the fourth quarter. So if you want to learn a little bit more about that, come join us. But this is one reason why we had that sudden move up. Now, why did
So let's,
crude?
let's talk about that real quick. Appalachia, people say, well, why is it gearing up for the fourth quarter? Because it's the closest basin to the Northeast. When the Northeast starts burning gas, the first gas comes out of the Appalachian Basin. So that's why you see that gas beginning to build up, because they're beginning we're seeing more demand happening there. So they are sort of the first on, first off type guys.
Okay. And that's part of the reason that that we have this. And when you take a look now, the Permian just keeps adding. But if you look at Permian and Appalachia,
Permian's completely different because they're adding oil, and they have to do something with the gas.
right?
That's where it is.
They can't produce the oil without doing something with the gas. So
Right.
what we try and focus on is, why do we have a sudden move up on natural gas? Has to do with a myriad of factors. One of which is what we just uncovered right here on the futures. And this was in our morning video to our membership on Discord. And that was, if you take a look at what happened earlier part of this year, we had short. Here's the zero line right here. This means that the managed money or hedge funds are short. We're at that same level. And what happened last time? They started buying back. And when they bought up, what happened to price, Bill?
Whenever they buy, price goes up. It's when they
That-
sell that we start seeing price come down.
And
I believe
think
that's your little right there, isn't it?
yeah. So the buyback is starting, and that is part of the reason. That's not the whole reason. Part of the reason. If you want to find out the full reason, come join us. If you're serious about this, come join us or do your research. But you're going to have to look at various factors, which we're going to cover in this training. So why did crude have a sudden move down? So Bill, I teased this out on a short. We had the election last week in the United States, and the
Right.
United States has surprised a lot of the world in adding a large surplus to production. If you take us back a decade ago, we were maybe producing 8 million barrels a day. We're now up over 13. We're at 13.5 last I checked.
Right.
So with the
Still
election,
still less than we refine. The last 3 million barrels are probably not refinable in the U.S. right now.
that seems odd because we have this fantastic. Oh, you can see we export some and we import some.
Oh, that's right. Pluses and
So,
minuses, all about pluses and minuses. But so, folks, crude oil, a crude oil barrel is not equivalent to a crude oil barrel. That's not equivalent to a crude oil barrel. They're all different qualities, and it has to be refined differently based on the quality.
right.
And so that's why when you see a lot of that move up, you are correct. The world did not expect us to bring on as many barrels as we did. In fact, we did not expect us to bring on as many barrels as we did. And so what happens is we love to bring on a lot of barrels. We love to be efficient. We're really good at it. And every time when we do that, what happens, Ryan?
Price goes down. So
We're so smart.
one of the things that I wanted to dispel a particular rumor was, if we take a look at what is one of Trump's battle cries that has been
I hate
associated.
that thing. Drill, baby, drill. That is just that is like a death toll for the price.
Well, hold on. I'm gonna let's go to bar chart. I'm gonna do this,
Yeah, you got too
and
many lines on another one, don't you?
actually no, I am gonna go to our chart, which is gonna show long-term WTI. Okay, so here is a price history chart of WTI, and we were trading above 100. Trump got elected right around here, or right around there. Actually, it was right around there.
Right.
So there was an expectation that drill, baby, drill is the reason that we went from here to here. It had nothing to do with that in any way, shape, or form. This did not have to do with economic policy. This had to do with OPEC. This had to
Right.
do with Russia. This had to do with, let's see, Russia. I'm just going to put R. And it had to do
Thank
with
goodness.
oil production in the US. So when you look at those three factors, OPEC, or Saudi Arabia in particular, and Russia had a price war. And they released barrels on the market at the same time that the US was adding barrels to the market. So what we had was a supply glut. It had nothing to do with economic policy. It had nothing to do with drill, baby, drill. So I want to dispel that rumor. This has everything to do with supply and demand and economics. And if you look at the economics from, I'll go back to our rigs, you will see that our active rigs have not increased in quite some time. 2023 was the last time that we saw consistent increases. So we're looking at a stalling of the production engine in the United States for both crude and natural gas. Believe it or not, natural gas. But natural gas has been prolific, but we are kind of peaking out, and there's reasons why. But the sudden move down had nothing to do with Trump, had nothing to do with anything except for Chinese demand, which has had disappointments.
Right.
So
Even though it's still at about 4.5% growing, everybody's expecting it to be at about 5.5%. And so you think, well, it's just 1%. Well, it's significant in the actual, it doesn't take a lot of barrels one way or the other to affect the pricing on crude oil.
right. So have you ever wondered why? Have you ever wondered why these things happen? That is
And
the
I wonder why
center.
all the time, Brian. I just walk around going, why?
This is the center of Energy Rogue, and part of the reason that we put this into a very affordable package. There are companies and people that spend thousands of dollars a month or spend 50 hours a week looking for this information so that they can draw insights like what we just did on the rig side of the equation, or this side of the equation, which is we take a look at the total net production change, frac spread, the drilled and uncompleted. We keep tracks of that. Crude oil from new wells, crude oil decline, natural gas from new oils, or new wells, and natural gas decline. If you break these apart, and it's part of the reason that I established this, is because a lot of people, they join and then they don't have time to really dive into the charts. This comes out multiple times a week and kind of gives you that insight. And look at this. We added this. This just went out. This just went out this week. Permian, Eagle Ford, Bakken. These are the only basins that are growing right now on natural gas. 220,000 MCF a day. Meanwhile, Haynesville, Appalachia, lower 48, those are dropping by 460. So
let's talk about why they're growing in gas. Permian's growing because of oil. Bakken's growing because of oil. Eagle Ford is growing because of liquids and GLs.
Right. Yep.
And so that's what is moving. And when you have an oil basin producing gas, they will also have natural gas liquids. And so that's what you're seeing driving it, not the price of gas, but the price of the liquids.
Yes. Yeah. And these are Rogue Edge gives you confident trading, time savings, and comprehensive coverage. There are people that want to do their own research. You are going to spend 30 plus hours a week doing this. This shortcuts that process. If you want to spend that 30 hours, that's great. $89 a month, $3 a day. It's more than worth it. So the energy rogue difference is data, not speculation. It's an action-driven approach, and it provides independent analysis. This is unbiased insights. We do not have, we're not financial advisors. We have stated at Holiday Inn Express, you can read all our disclaimers if you're bored, but this is really tailored for your needs. So the desire, real benefits of Rogue Edge. You can boost your net back if you're a producer. You can make smarter trading decisions if you're hedging, if you're trading. You can cut your research time, or if you are consuming, this can save you so much money. It helps you become a better planner. Plus, with Rogue Premium, you get the community support, global community of traders and hedgers, and we have 24/7 access to Discord, real-time discussion of updates, and the desire. Over 300 traders and professionals trust Rogue Edge. See how users are increasing profitability with Rogue Edge, and this is kind of cheesy. Limited time offer. It's actually offered. It's offered out there. You can sign up today. You can sign up tomorrow. But if you wait, you're on your journey, you are going to cost yourself time and money. So if you wait, it's really only going to be at your detriment. So join the revolution. Come join us. Unleash your potential. Take control of your future. And we provide real-time insights, Discord community, and a final reminder, Rogue Edge, market shifts, and you can click below to get started. And the key elements, you can get visuals, content, and a call to action, which is taking control of your trading adventure. So that's a little bit about us. This is why data comes in so important. For example, when we look at the decline, a lot of people don't realize if we're producing, I'm gonna cheat here. If we're producing 101 BCF a day, how much decline or how much production, if we don't bring on new production next month, how much production do you think we'll have next month, Bill?
You said 100 and what?
101?
101. We'll be down close to 100 by the next month.
If we brought on 0, you think 100 or lower?
Let's see here. Now, are we talking about gas or oil? I was thinking oil.
We're talking gas.
Okay. Now, gas. If we're at 101, we'll be at 98.
Bingo. Because every month natural gas declines, and it depends on the engine of new production, and that new production engine.
Let's do a timeout. That took how long? 15 seconds?
Yeah.
It would have taken you about 2 hours to find all that information.
Just that question.
Just that one question.
Just that one question. Now, how much are we getting from new production? And again, I'm cheating because.
Yeah, he put it all up there on the square. It's right there in front of me.
I'm cheating. And drop us a comment if you want to play. So how much new production?
How much new production? We are doing, I was thinking it was about 1.5 BCF, but I may be shy a little bit.
So new production, we're declining over 3.3 BCF a day every single month. That means if we do nothing, 101 does go to 98. We're just going to round it off. 101 goes to 98. Now, what has happened is the 101 goes to 98, but we've been bringing on new production of about 3 BCF a day, which brings us right back to 101. So if we're looking at October numbers and September numbers, they look the same. That's the reason why. There's a constant engine of new supply that is being added to the mix, and that offsets a natural decline in the basin. And crude oil.
But here's the magic about those numbers, Brian.
What's that?
Is as you bring on new production, you actually increase the amount of decline. because new production declines faster than old production.
Right.
So on a math basis, you're actually increasing decline by bringing on new production,
Right.
and that the overall decline number will continue to increase as we bring on new decline. I know that's a crazy math thought process, but that's basically how it works in the physics of the drilling world. Is that a new well decline? Gosh, what some of them decline as much as 70% in the first year,
Yeah, they do.
but the older wells decline up closer to 7%. So you actually, for every new production come on, you're increasing that by that much, 10%. It's or 10 times, not 10%, 10 times. So it is harder to track that than what you would think. And that's why we go after and track it for you and look at it and start seeing how the impact is this. Because you have any blip in production, any blip of production at all, it's sort of, it catches up to you. I call it's the wake behind the boat. If you're going in a boat and you're going a certain speed and you slow it down, that wake will catch up and swamp your boat if you're not careful. So you have
Right.
to slow down slowly. This is exactly what happens when you're doing in production. If you've never been on a boat, pretty bad example if you've never been on a boat, but that's what happens. It catches up to you and sneaks up from you from behind. So that's why it's important as we bring on that. There are some discussions. Say, well, we got people holding gas back and they're just going to turn on the spigot. That's true to a certain extent, but they can only turn on to a certain extent that they have the infrastructure to move it out. If you don't have the infrastructure to move the gas out, it doesn't matter how much you have back there.
Right. So what I just drew up here, for example, is
Pretty good, Brian. That's pretty good.
That's not too
I'm
bad.
impressed.
That's
I'm
not too
impressed.
bad.
The whole
So
different colors and everything.
yeah. Well, fortunately, while you were talking, I was able to do that. Let's pretend we're here today. So we're here today. So what that means is if we don't see added production, we likely may decline by 30% in a year. So think about that. If we don't add new production or that engine slows down, we are going to decline. And so it's a matter of how much new production, for example, this late yellow or green one, if that hadn't have come online, we would have been dropping from here to here within 1 year. So, so this is a dynamic that we watch very closely. How much new gas production, and you will see, this was in our shorts. We have started ticking up. This is not a surprise to our members because this is something that we've been talking about. So, so we will see a rise in production in the fourth quarter. It is going to fall short of expectations. We will not exceed last year's high of 105.8. I'd be surprised if we exit higher than 103. However, we have touched 103 this year, so we very well may be. So this is what we talk about in our Discord room. And really, what I'd like to say is, or what I'd like to close with, and then we'll open it up for any questions. If you have a question, type it in. You know, just let us know you're here. If you've gained something of value, hit a like, hit a subscribe, share it with a friend, because what matters is that you understand the raw supply, raw demand, storage, imports, exports, and technicals. And if you are subscribed to Rogue Edge, you get this convenient right here. This tells you everything that you need to know. So you can just literally look at this, and that tells you everything that you need to know. So we would love to see you inside, but let's open it up for questions. Bill, do you have any questions?
You know, I think some of the things that we were talking about is it's hard for sometimes the grass. This is what we were talking about. It's never one thing. It's multiple moving targets. So a good example is we're trying to factor in for first quarter next year the additional LNG that's going to be going out. Now, a lot of people say, well, because Europe is not going to use more, that there'll be less. the plants are being built, I think we'll find a market.
Right.
And so that's going to do it. And when we talk about how much gas that we have available to us, it's always at a price level. We have a whole lot less gas available to us at $2 than we do at $4. At $4, that opens up a whole lot more fields.
Yes.
At $6, it opens up more fields. And so it is price bound as far as volume can be price bound based on returns. The more we see consolidation into public companies, it becomes more about what the share price can absorb with these public companies as they develop for natural gas. If they're large multinational public companies, then we're comparing with the rest of the world where the return is going to be more beneficial than drilling in the U.S. And so we look at all these things. So that's something you want to begin to get a more of a, and if you haven't figured it out yet, natural gas is a global commodity now. And so it makes a difference what's going on in the LNG market with the JKM and the TTF. Those are the things that you need to follow closely, and we keep it right there. There you go.
Right there. Yep. That is your basis, and that is your expectation. So depending on when that
So
flows.
if you're in New York City and you're not wearing a coat yet, that should be telling you where the gas price is going. I mean, sometimes it's as simple as that.
Well, you can see it right here. This is just the Tennessee Zone 6 is about double the price of Henry Hub.
Right.
So then you have different parts of the country that are going to have different values. And, in the Chicago, Michigan area, I mean, this is interesting. You got Michigan at -29, Chicago +18. So you do have variances depending on what time slice you're looking at. But all of these do matter. And this is part of the reason that we don't want to guess. We want to know exactly why. And that's what we uncover every single day when we're looking at the markets, is we uncover that and actually deliver. It's kind of funny. We actually mentioned $3. Let's see, we're at 298.5. I want to give a shout out, James, if you're watching this. $3 is the key. And you know when he did that? You know when he typed that over? I'm going to say it was here. That was right in our Discord group.
Yeah,
so,
exactly.
And that's not me. That's one of our members. We actively participate in each other's journey and in each other's benefits. So James, if you're listening, hi. Good to see you. Well done. Good call. Great call. And looking forward to more. So
One smart fellow, that James.
he definitely is. He definitely is. So I think that is all that I have. Is there anything else that you have on your mind, Bill?
No, that's what I got. You guys, you don't leave your income in your business up to guessing. Learn to figure out what's going on and learn to do that so that you can have a strategic look forward and understanding prices. And you do not have to be a producer for this to make a difference. If you're an oilfield service company and you're trying to figure out what your producers are going to be doing, this is where you can learn about that, because they're going to be following the price and they're going to be doing that. And you'll know whether or not you're going to get any more service or whether you're going to get any more business. We can help you with that. We've been doing this for a long time and we've seen a lot of different things happen. So, please subscribe, give us a call. I'll guarantee you that $179 at premium, that is the deal. That's the deal of the century.
Well, if you think about it this way, if it helps you, if it helps you make just a little bit more money as a trader, or a little bit more value as a producer, or a little bit more value as a consumer, or teaches you how to hedge, there's a very simple trick that we've taught multiple producers, and they've thanked us over and over, that added 15 to 20% to their bottom lines. And flip side is we've guided some consumers on how to position their portfolio that yielded and shielded them from a 50% price uptick. So these are real world examples, and these are things that Rogue Premium unlocks for you. So if you're serious about your business, your trading, whether you're a producer or a consumer, midstream, it all matters. All of it matters.
So if you're a producer or end user, volatility usually not your friend. If you're a trader, it is if you're on the right side at the right time. What we teach you is how to look at that volatility and know when something's volatile or something's a trend.
Yep.
And so, listen, that's all I got, Brian. Right now, brother, it's all about you.
Well, listen, folks, thanks so much. If you learned something, drop us a like, drop us a comment, let us know how we're doing. Let us know if there's something you want to hear. We're trying to provide everything between now and the end of the year as tools that can be added to your toolbox so that you can go into 2025 and make a huge, huge difference for yourself and your company. So that's what we're trying to provide, is give you an added tool every single week. So
Hey,
that's
Brian,
what we're here for.
I got one of your videos from when you made one of your first sales call.
Oh, that's bad.
I'm Luke Skywalker. I'm here to rescue you.
That is great. That is fantastic. I like that. Well, you know when it comes to you.
Yes, I told you I was your #1 fan.
Yeah, exactly. Me and a pig. I'm loving it.
Much. That's all we got. Come see us. Come see us at energyrogue.com. Drop us a line, and we'd love to connect with you. As a matter of fact, we're going to be hopping off this and talking to a new member in about 20 minutes. So listen, thanks so much, and we will talk to you next week.